Okay, my name is Rodney and I'm a professor of finance. I first got involved in Islamic banking a long time ago, back in the 1970s. I was working on the Gulf countries, writing a book on banking and finance in the Arab Middle East, and I was in Bahrain, and the central bank, which I went there to interview some people. They suggested that I had chatted to basically people who were engaged in setting up Bahrain Islamic Bank. This was back in the 1970s. And I went along and saw them. And I was very impressed because they were former Arab Bank employees, who were Palestinians, who basically had given up good careers and lucrative jobs to go and work in this new, untried institution, basically, and to set it all up. They're professional bankers, but they're also taking a big chance of their careers. And then from that I got quite interested in why they were motivated to do that, what the principles of Islamic banking were, and that was really how it all started. Yes, essentially it's participatory finance. The idea is that the bank itself should be involved in a degree of risk-taking, so risk is shared with the client. And also, of course, profits are shared with many of the financial instruments that are offered. I think we always have to be very careful when we're translating Quranic teaching. Essentially, the Quran was written in Arabic, and it conveys the precise meaning in Arabic. Sometimes when we translate these things into English, they don't come across in a way which is basically, if you like, something which is kind of acceptable in terms of 21st century English usage. But the problem doesn't lie in the Quran at all. It lies in the translation and trying to relate it in a different language, basically. So I think we have to be quite careful about how we actually interpret these various surah in the Quran. It is clear, of course, however, having said all that Lariba is clearly very wrong. It's morally unjust, and deserves to be condemned. But obviously the issue of what kind of language we use to do that, that's another point really, basically. The terminology going to war is not a term that really we would use in English, but having said all that...
What term would you use?
Well, essentially that it should be stopped, it should be prohibited. But it's not a matter of so much of passing laws. It's a question of essentially getting people to understand why it is that riba is so bad, and that's the challenge. So it's not so much a question of prohibition as such, but it's a question of saying yes, this is wrong, you shouldn't do it. But at the end of the day, it's up to the individual and the financial institutions to decide for themselves. So yes, if we look at what interest is, it's in addition to a principal sum, and that clearly is what's meant by riba. Yes, so I think that would be my interpretation. Well, I think one of the big misconceptions is the idea it's only for Muslims. The point is that the point about Islamic banking and finances involves certain principles that are basically moral and ethical, and these apply to everybody. And it offers a different model, different way of doing financing, which is, let's say, in many ways vastly superior to the contemporary system as practiced today. Obviously, we see many problems during and after, and indeed before the financial crisis of 2008, and of course even the earlier Asia crisis of 1997. And Islamic banking can avoid that essentially.
How about the belief that the term interest, if taken out of a contract and replaced with another word, simply just by that act would make it riba-free?
No, that wouldn't be. It's more than that, basically. It's not simply a matter of language. The contracts themselves have to have an element of risk sharing in the contracts. So you've got to look at each individual contract. You've got to say, well, what are the risks? Where are they being shared? The bank is participating. What do we mean by that participation, and so on? We have to look at detail of the contracts. The contracts have to be different, but not just by leaving out some words and substituting other words. That's not sufficient. I think it's a mixture of things. I mean, we did have these types of financing present, for example, in the Ottoman Empire. To some extent, it was a reflection of a changing realpolitik during the sort of late 19th century, 20th century of colonialism and neocolonialism and so on, that resulted in the spread of essentially Western-style, commercial banking. Obviously, by the time the 1970s came, conditions started to change considerably, and many people wanted to return, if you like, to their Muslim roots, and wanted to basically try to apply this to modern financing. And this is really how it arose in its contemporary form. And of course, some of the traditional ways of financing were modified considerably to make them applicable to today's basically financial challenges. So the contracts are rather different to what was offered 1400 years ago. But the point is that they are, if you like, Sharia based, not just Sharia compliant. They're Sharia based. The contracts have been remodeled to achieve a sort of traditional purpose, but in a new way, in a different way.
Would you say traditional banking was influenced by Islamic banking in its formation over the last 200 years?
Oh, very much so, yes. But I mean, there are examples of that. But one has to recognise as well that, of course, essentially commercial banking deviated a lot from Sharia teaching. And we have to look at the history of Judaism and Christianity and so on to see some of the things that actually occurred that went wrong, if you like. For example, in terms of Christianity, we had the advent of Calvinism. Prior to that, interest was seen as something which was prohibited in Christianity, because they looked at Old Testament teaching, which is quite clear in Leviticus and Deuteronomy, that there's a problem with interest, and it's not permitted, basically. But when Calvin came along, he kind of opened the door to interest, and that was really, I think, that was the issue. And that was very influential in the United States, for example, because Calvinism became a very influential, basically, form of Christianity in the United States. So this is something which spread. Not to blame Calvin. Don't criticise him in all respects. In some ways, he stood for good things, but because he believed in making money for God. You weren't making money for yourself; you were making money for your Creator, the Almighty, basically, to serve His purposes. So Calvinists have quite often been very generous in terms of basically, essentially not just earning money for their own selfish purposes, but in terms of setting up endowments, charitable funds, and all of this. This is all very commendable. However, having relatively high rates of interest is not, basically desirable. Having said all that, Calvin recommended that there should be limits on interest. He didn't, support the kind of interest that's charged by loan sharks, or basically these sort of companies that have payday lending and so on that charge ridiculous amounts. But nevertheless, he did open the gates to basically some reconciliation between certainly Protestantism and the charging of interest. Yes, there is, because obviously people are looking for financial products that are similar to those offered by conventional banks, but they want to do it in a way which is Sharia compliant, basically. And that's essentially what Islamic banks or Lariba-free banks offer, essentially, the way of doing that. For example, 1400 years ago, people were not so concerned about taking out mortgages to purchase houses, for example, because houses were relatively cheaper and property rights were less well defined and so on. But nowadays, many people, most people want to own their own house, but they can't afford to pay it in one lump sum, so they have to find financing for it. So a major job of Islamic banks is to identify how you can have Islamic mortgages, basically. And there's not, this is something which is desirable, but clearly it wasn't something that preoccupied people's minds 1400 years ago. Well, the differences are quite considerable, basically. I mean, essentially, obviously, apart from the fact that Islamic banks are Lariba free, there's also the issue about how risk is managed, because obviously they have to get involved in risk sharing to legitimise their returns, to legitimise the profits that they're making. But the issue is you don't want to throw money away. They're not charities. They have shareholders who expect to get capital gains and dividends on their shares. They've got investment depositors who are expected to get returns as well. So they have to be careful about how they manage risk. And that's partly the art of Islamic banking, to know how to manage different types of risk and to do it quite carefully and cautiously and conservatively. These are not institutions that are trying to basically approach things in a very radical or way, basically. I mean, it's radical in the sense it's different, but they are inherently fairly conservative. And if people go to Islamic banks thinking they can get funding because conventional banks have refused to give them funding, they won't be able to get the funding. That's for sure, unless they're basically creditworthy.
Would you say they complement one another, or is one unsettling to the other?
They're in a sense competing in one sense, but obviously they're also complementary in the sense, I mean, it's quite complex really. They're complementary in the sense that clients for Islamic banks are looking for the same kinds of financing as clients from conventional banks, basically. So in that sense, they're sort of complementary. But obviously Islamic banks are doing it in a very different way. They're competing qualitatively, not really in terms of pricing. The aim is not for Islamic finance to be cheaper or more expensive. It varies according to what's been financed and what the length of the period of the financing and the risks involved and whether collateral is offered or not and so on. All of these things which affect the cost of conventional financing also affect the cost of Islamic financing. Banks have to, as I say, they're not charities. They have to make margins, and that's their mandate, the way it's set up essentially. And I think that this is a model which has become quite acceptable to Sharia scholars, and it's quite acceptable. And essentially, they're set up as companies. And obviously that wasn't maybe the way it was done traditionally when they were set up as credit unions and these sorts of ways. But credit unions have got their limitations. Companies are much more flexible about how they can expand and raise capital and so on. I think it's important to have them segregated, basically. The issue would come, for example, when conventional banks open the so-called Islamic windows. One has to be quite careful because the money which the Muslim depositors are putting in, or indeed non-Muslim depositors that want to make sure they're not supporting riba, are putting in, is not used for interest-based lending, essentially. So you have to have basically separate accounts for the Islamic part of the bank. So it's important to have a segregation of the money, basically. And of course that's what the banks should do and must do. If we look at Maybank Islamic in Malaysia, for example, they produce an entirely separate set of accounts. So we know how much is going in terms of Islamic Sharia client deposits, and we know what is going out in terms of the various methods of Islamic financing. And there's no transfer of funds from the Islamic part of the institution to the conventional part. They are sharing things like IT systems and all of that. There's no need to have a separate IT system. There's no such thing as an Islamic IT system. We don't need that. But obviously when it comes to the actual money itself, it does have to be segregated, basically. No, I don't think they do, actually. And of course, most of the laws governing Islamic banks are essentially either common law, based on English common law, or civil law. The Islamic law bit comes in terms of having a Sharia board, and they of course approve what is basically what is offered, in the sense they read all the documentation which is produced for the contracts. One has to appreciate that the documentation is produced in relation to, for example, the United States. here in relation to US law. You know, it's not something which is sort of outside the law. It has to follow basically the state and the federal regulatory framework in the United States. And this applies in other countries. I mean, in the United Kingdom again, they have to follow basically the banking law. They're not exempt from it. And of course the contracts have to conform to that. At the same time, the contracts are obviously read and vetted by the Sharia scholars to ensure they are Sharia compliant. So it doesn't mean to say that the Sharia law is a kind of alternative to civil law, English civil law, or sorry, continental civil law, or English common law, but rather it's sort of an additional layer. So it's a way of basically filtering what is Sharia compliant and what is not Sharia compliant. And that essentially is the value, if you like, which the Sharia scholars add to Islamic finance, essentially. Well, I mean, Islamic finance cannot do that, but of course they can, and obviously compound interest is objectionable. But for example, I mean, you get Islamic pension funds, which are Sharia compliant. They can basically invest in sukuk, they can't invest in bonds, but they can invest in fixed income securities, as long as they're set up as sukuk. They can invest in equities, providing the equities are Sharia compliant. So, you know, when one looks at something like an Islamic Sharia compliant pension fund, it's not so different in terms of, you know, the constituents that it's holding in the portfolio to a conventional one. What's different is the nature of the assets that they're holding. Because obviously, particularly with regard to, with regard to equity, most equity are Sharia compliant. 90% in most cases. There are some things that aren't Sharia compliant that you won't invest in, obviously. You won't invest in conventional banks, that's a major exception. You won't invest in things like breweries and all that. That's not a great big significant chunk of the market. However, on the fixed income side, obviously bonds are important. So, you know, you need sukuk instead of those bonds. So you're doing a lot more adjustment on the fixed income side, basically. And you know, that can be done, and you can provide quite viable Islamic solutions to all of this, where you get at the end of the day pensions that are able to pay out basically a reasonable amount and so on. There's a lot more scope for work to be done in that. Islamic finance is particularly important in the GCC countries, in the Gulf countries, the Arab Gulf countries. But obviously in these countries a lot of the pensions are funded by government. We don't see a big growth. We're starting to see it of private pensions. But when we see the growth of private pensions, then we'll see much more stress on asset management and so on. And indeed it will expand the sukuk market, it will expand the amounts of money going from Islamic finance into equity investment and so on. So I mean, that's all for the future. But at the moment, because the governments are providing so much of the sort of pensions, and they're offering a kind of, you know, pay-as-you-go basis, in the sense that today's pension savers are basically paying for today's pensioners. You want to get away from that by having a fund, basically, and that's what building up funds are all about, essentially, so that you know, you don't have that burden on today's salary earners, that they're basically paying so that their generation will benefit from pensions, not that the present generation will benefit from the pensions. Right, well, all Islamic banks, has been the practice since really 1976 for them to appoint a Sharia board. And the Sharia board monitors all the contracts which are offered by the bank to ensure that they're Sharia compliant, basically. Obviously they can't look at every single contract, so what they approve is a template. And obviously you will get some drifting away from the template, as every contract is different. There'll be a different name for a different client on it, there'll be a different number of years, there'll be different, you know, some maybe monthly repayments, some maybe quarterly repayments. It all depends on what the nature of the contract. The Sharia board approves a template, but they have the power to ask to look at any contract. In most Islamic banks, which are of reasonable size, you get a so-called internal Sharia audit unit, who are permanent employees of the bank. And what they do is they can say, well, we'd like to see some of these contracts. You know, they can ask at random. Well, they may, if it's something that's quite significant financially, they might ask to actually see the contracts. And what they'll be looking for is, how far does this deviate from the template that was approved by the Sharia board? If it's a significant deviation, there's some questions about the Sharia integrity of the contract, then they'll actually have it's their duty to inform the Sharia board, and the Sharia board will then investigate. So essentially, it's got an investigatory role to ensure that things are indeed Sharia compliant. And it's on their, you know, the advantage from the point of view of the individual bank client is he or she doesn't have to worry about Sharia compliance. It's no longer on their conscience. If something is wrong, that's the responsibility of the Sharia scholars and the Sharia board. You know, they're the ones that are accountable to the Almighty for what they've done. You know, the individual client is putting their money in or taking money out in good faith, so to speak, relying on the judgment of the Sharia scholars. So the Sharia scholars have got a vital role to play, and they should obviously take their responsibilities seriously. And in my experience, they do. I mean, I've been quite impressed by many of the Sharia scholars, and I don't agree with some of the criticisms that some people have of some of the scholars. I don't share those criticisms.
Does their role include policy making, or primarily contract and product review?
It's primarily contract and product review. The policy making at the end of the day and matters of bank strategy have to be decided by the board of the bank. You can urge that, but in practice in most Islamic banks that's not the case. The Sharia scholars, their remit is confined to Sharia matters. These are obviously very important, but when it comes to, for example, you know, the bank's expansion strategy, you know, the types of products that they're offering, all this kind of thing, these are not matters of Sharia, these are matters of business, you know, and you need people that basically are if you like, business tacticians and you know, business planners and trying to drum up new business and so on. You need that sort of person to be involved in that. So it's a different area basically. Well, you'll always have people that criticise, you know. I've criticised anything basically. Islamic banks have achieved a lot. I'm not critical of Islamic banks. I think that you know, the products they offer are quite credible and work well and are viable. But some people want, you know, things to be totally pure in their terms. But the danger is if you want everything to be, you know, you say, for example, oh, we can't invest in equity because stock markets are speculative. Well, I think that they're wrong, basically, because essentially equity finance is tremendously important for business. And if you say, well, we're not going to invest in equity finance, then you're going to cut yourself off from a large part of financial transactions, basically. So these people might be regard themselves as very pure, but in the end they become almost hermit-like, because basically they're totally cut off from the rest of society and the rest of the economy, and they're not going to do very well. You know, they're not going to be able to grow their wealth or grow anybody's wealth. You know, that's the issue. So I think that you know, they have to engage. And I really don't think the approach where you sort of try to basically say, well, this has to be totally pure and so on. You know, for example, you can say, I won't drive along this road because this road was built with interest-based finance. Well, that's ridiculous because, you know, obviously it's a road, you know, and of course it would be desirable if it was financed Islamically, but it might have been built quite a number of years ago, and you know, you've got to be realistic, you know, so that's the kind of issue. But, you know, people want to be sort of, some people anyway want to be ever so pure, but it's kind of, they're just facing false obstacles. Right, well the first thing obviously is the crooks don't pay interest. Essentially they pay, it depends on the underlying contract. They may pay rent installments, they may pay profit shares basically, but there can be no interest. And also they have to be asset backed. So that essentially the funding which is going in is essentially being used to for purposes that have an asset backing. They don't necessarily have to fund the asset that is used as the backing, but they do have to fund basically real economic activity. And Sukuk is something which has grown in recent years. Over the last 10 years, there's been a phenomenal expansion in Sukuk. And they are judged to be very successful alternatives to conventional bonds. But obviously you have to be careful of Sukuk as well, because you can get excessive indebtedness in Sukuk, just as you can with conventional bonds. So Sukuk aren't. I mean, it's for those that want basically fixed or indeed variable income finance, basically. Quite often for large projects. Most Sukuk are corporate, but we can also have sovereign Sukuk, and we do. And I say but they all must be asset backed. We can have Sukuk, for example, that are based on revenue coming in. For example, if you're Saudi Electric, to take one example, which is a company which is partly owned by the Saudi government, but it's also listed on the stock market in Saudi Arabia, has had substantial Sukuk offerings. Now, what happens is the returns to the Sukuk investors come basically from the electricity bill payments of the clients of Saudi Electric, basically. And of course, the money is used to build, basically the power lines and the transmission stations and all of that. And that's seen as perfectly legitimate, but there's not. But essentially the actual assets of the electricity company don't represent the backing. What represents the backing is the income which is anticipated to come in during the life of a Sukuk. That's perfectly reasonable. You can have also things like, in terms of assets, you don't have the physical assets, you can have assets in terms of intellectual capital and so on. Knowledge, know-how and all that can be an asset as well. So you shouldn't just think of it in terms of like physical assets. And the Sharia scholars have accepted that. Not all of them, but many of them have. Many of the influential scholars accepted that distinction. Well, I think, essentially the methods of operating now are well established. I think there does need to be some refining of some of the products. On the deposit side, I think the investment accounts provide a very useful service and provide a useful way for people to save. But I think we have to recognise that the risk is of a variable return. We don't know how profitable the bank will be. The investors, the old investment account holders, are basically sharing in those profits. So the risk is of the profit variability. Now, some Sharia scholars are insisting that the deposits themselves should be basically not guaranteed. And this is really the official position today in terms of basically Sharia scholars, and they're looking at these sorts of accounts. I myself don't feel that's necessary. I think it's taking a risk too far, because if you're having a bank deposit, you're expecting to get your money back in nominal terms, and that's not unreasonable. And of course, if you are sharing in the risk, so you're getting the profit, or not. You may get no profit if the bank's making losses or whatever. But there's no reason why the depositor should take a hit, basically. So I think more thinking needs to go into that kind of thing. Similarly, at diminishing musharaka, there are various technical issues that need to be addressed, and they're not fully addressed at the moment. So that's on one side. On the broader front, we have to recognise that Islamic finance is very limited in terms of its geography. It's very developed in Malaysia, it's very developed in the Gulf countries, but it's not developed in most Muslim countries. And in many non-Muslim countries it exists, but it's nothing like what it could be. So there's a need to basically have expansion in more markets, and there are many challenges in that. We'd like to see it, for example, expanding in North Africa. But there's very little Islamic finance, yet the countries are more or less entirely Muslim. So why is that? What's going wrong? What can be done to rectify this? Again, in Indonesia, the most populous Muslim country, yes, we do have Islamic finance, and the central bank has basically taken some initiatives under Islamic banking laws. But the reality is, it's less than 5% of all deposits are Islamic, which is a very low number. So we'd like to see that expand, basically. Again, in Muslim minority countries like the United Kingdom, for example, we see some Islamic finance. A lot of it is simply asset management on behalf of clients in the Gulf. a lot of the assets are residential property or commercial property in the UK, which is perfectly Sharia compliant. But it needs to go beyond that and do other things, basically. Countries like France, where I live, has had a pretty negative basically view of Islamic finance. So it's an attempt to basically get the sukuk issuance going and the law changed, but the French Senate turned it down, and nothing has happened. They didn't even say why they turned it down. We know, of course, but they don't say, because these things are quite sensitive, or they are sensitive to them. So that's an issue. So I think it would be nice to see Islamic finance spreading more geographically into more markets, basically, being available as a choice to more people. At the moment, for the majority of Muslims, the choice simply isn't there, and that's a great pity. I think on the wider front, in Islamic finance in relation to all finance, if you like, there's also a lot of lessons can be learned from the methods which Islamic banks use and the instruments of Islamic finance. It is clear, excuse me, that there are chronic problems with today's global financial system. We had the crisis of 2008. Unfortunately, lessons have not been learned. And although we do have higher capital adequacy requirements and greater liquidity requirements, that's not the whole solution. The problem is that there's basically a culture in many of the banks which is really not very moral, not very ethical. And this is something that really has to be changed. We see this from the Libor case and the rigging of rates. We see it basically in terms of foreign exchange markets now. This is all unfair, and we see the way traders are operating and the sort of deals banks are getting involved in, and clearly there's a lot of issues in all of this. So I think, again, by looking at Islamic finance, it raises lots of questions and challenges which need to be addressed in the conventional sphere. So my hope would be that also not just Islamic banking will grow and develop, but also conventional banking will change. I'm not suggesting it will become Islamic, but it will change its methods and practices to become more ethical and serve a moral purpose, and not just simply be about greed and making money, but the bankers themselves. They should have more of a humble attitude, and of course they're entitled to reasonable pay. Of course, we're not saying that they shouldn't be paid reasonable salaries and so on, but some of the salaries that are paid bear no relation to basically their performance, and some of the incentive mechanisms are very wrong, basically. For example, rewarding bank employees according to the number of basically people they sign up for mortgages is not a good way of remunerating people, because it only encourages them to basically advance mortgages to people that can't afford the mortgages. And these practices need to be stopped. And yes, there was promise that a lot of them would be stopped after 2008, but that hasn't happened. They're still doing the same thing, which will basically, I'm afraid, will result in future crises. Hopefully not as bad as 2008, but I think we need a change of culture, not just a change in terms of liquidity management and capital adequacy.
What do you hope? What part would you like to take in that?
Well, I hope in my writing I can contribute basically to an understanding. Obviously, my work has been widely read, not just by Muslims, but by non-Muslims, basically. And I can have an impact through appearing at conferences and so on. To take a specific example, there was a conference on economics and religion. And it wasn't just Islamic finance. I was talking about Islamic finance. Other people were talking about the position of the Russian Orthodox Church, for example, in relation to finance. But I think this presented an interesting, case. It is important that Islamic finance, the ideas and so on, are brought to other forums, not just Islamic finance forums, but are brought to wider forums, basically, like this one on religion and economics. And there was a lot of questioning. Obviously, there's a lot of malpractice in Russia. We don't look too far to see it, and basically, and there's lessons that can be learned, essentially. So I think that I see that as something I can do, basically, by appearing and by writing as well, and not just in Islamic finance journals and books in Islamic finance that are being edited, but also write in other books which are not specifically on Islamic finance, but are dealing with finance more broadly. And that's again, that's something which I've done. I've got a sort of publications and such volumes and so on in such journals.